Term called the TAKO trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
And you ask a nasty question like that.
Was President Trump just caught off guard by the TAKO trade? His reaction? He called it the nastiest question he's ever been asked. So what exactly is TAKO, and why is it shaking up Wall Street? In recent months, markets have been on a roller coaster ride, one largely powered by Trump's unpredictable tariff threats. But now, investors are starting to treat his tough trade talk with skepticism, giving rise to a cheeky but telling strategy: the TAKO trade, short for Trump always chickens out. The logic behind it is simple. When Trump threatens harsh tariffs, don't panic sell. Odds are he'll backpedal and markets will bounce back. The term was coined by Financial Times columnist Robert Armstrong, and it reached Trump for the first time during a recent Oval Office press briefing. When asked for his take, Trump seemed taken aback. "I chicken out? I've never heard that before," he said, visibly irritated. He defended his approach by pointing to his tariff actions on China, noting how he initially imposed a steep 145% rate before lowering it to 100% and eventually to 30%. According to Trump, this wasn't backing down. It was called negotiation. He explained that he deliberately starts with a ridiculously high number and scales back once other countries start cooperating. Trump's recent moves on European tariffs only added fuel to the TAKO narrative. Just last week, he threatened 50% tariffs on EU goods starting June 1st, sending markets tumbling. He even doubled down later that day, saying there was no room for negotiation. But within 48 hours, he changed course, announcing a delay until July 9th after EU officials requested an immediate meeting. When U.S. markets reopened after Memorial Day, stocks surged into the green. This pattern isn't new. On April 2nd, Trump rolled out sweeping reciprocal tariffs on dozens of countries, set to take effect April 9th. But mere hours after implementation, he paused them for 90 days, except for China, citing concerns that investors were getting yippy-yappy. Behind the headlines, markets were clearly rattled. The S&P 500 was on the edge of a bear market, and bond yields jumped as investors dumped U.S. debt. But once Trump announced the pause, the S&P 500 posted its best day since October 2008. So, is it negotiation or just another round of the TAKO trade in action? Investors seem to think they've cracked the code.